Hey everyone, this is Mo from Momentum Finance. In this short video, I'll be sharing with you 5 stocks that I've been buying in the stock market this week. This includes 3 stocks that are in US dollars, as well as 2 exchange-traded funds, ETFs, that are in Canadian dollars. Later on in the video, I'll also walk you through my entire six-figure portfolio that I have here with Wealthsimple Trade and share all of my holdings and how they've been performing in the market. One of the shares that we've bought this week has been several shares of Amazon, ticker symbol AMZN. Amazon has definitely come down from its all-time highs. Over the past 1 year, the shares of Amazon are down close to 41%. However, we are gradually seeing some signs of improvement. In fact, over the past 1 month, the shares are up by about 7.5%, and over the past week, they have been almost stagnant. So for us, we did pick some shares of Amazon. We bought today one share at the price of $99.52 US dollars. We also picked up a few other shares. We bought 2 earlier on at the price of $99.76 US dollars. The other big holdings that we've had and we've been picking more shares of is actually shares of Tesla. Tesla, if you look at it the past 1 year, shares of it as well has been down quite extensively. Shares of Tesla have been down by almost 47%. However, in the past 1 month, it's down, but by only about 6.2. In the past week, it's down by 1%. And the last trading day today was up by almost 2.5%. We did pick several shares earlier this week. This includes picking up one share at the price of $192.13. Earlier than that, we picked another one at the price of $192.61. We did also pick multiple shares here, 2 more shares at the price of $187.30. That was better kind of pick on those stocks. And we did have as well 1 shares here at the price of $187.34. That's been definitely one of those shares that we have aggressively added to our portfolio. It's in fact right now our 3rd large holdings in this portfolio. The other shares that we started picking up, a few of them, buying them today, is mainly for the sake of dollar cost averaging. We already had shares of Nio, which is another electric vehicle producer, but we wanted to buy them now that the price of it has gone down drastically, and so that we can bring our cost average down. We bought 3 shares at the price of $9.62. We also bought a few more at the price of $9.60. Here, in fact, we bought 4 shares. With those 7 shares that we picked up, we are gradually bringing our cost average down, though I believe it's going to take us quite a while. Our average price for Nio is at this time even higher than 52-week price. I believe it's hovering close to $32, which you notice the 52-week high price is currently at it was at $24 or change. So a long way to go to bring it down. Today, the shares of Nio were up massively, almost close to 7%. If you look at the past week, it's up by about 4.5%. Past months, showing to be up by around that 7%. But however, in the past 1 year, it's down heavy, down by almost 55%. I also came across an interesting article from Forbes where they talk about what's next for Nio Stock. They talk about how in their last quarter, even though they had an increase in their revenue, in terms of meeting the estimates from Wall Street, they failed to do so. They also had poorer performance when it comes to their actual earnings. In fact, they had a bigger loss than was anticipated. That's why the stock has performed poorly. There was a reference that even at the price of $9 per share, which we saw the shares are currently hovering around that range, this is almost about 85% off of their all-time high, and about that 50% plus down from their past 1 year. They are mentioning as well that with the easing of the pandemic, there are some more positive prospects for the stock. If in terms of the comparison of the shares of the Nio to that of their revenue for the year 2023, they're only showing a multiple of 1.3. And if you compare them to that of Tesla is showing a multiple of 6 times their 2023 revenue. And for other manufacturers like Li Auto, that multiple is at 1.7. So they have the most favorable, estimate and ratio when it comes to comparison to their stock price to their 2023 revenue among these picks that we talked about. All of that kind of put together is encouraging us to try to gradually pick up some shares of Nio and take advantage of dollar cost averaging. As I did mention, we also bought two sets of different ETFs. The one of them is actually VDY, and that's the Vanguard high quality dividend ETF, allowing us to get exposure to around 47 high quality Canadian stocks. We picked up some shares of VDY through both fractional buys as well as some full share buys. I'll show you in a minute how our total number of VDY shares are in this portfolio. Currently, it is our largest holding. And the other ETF that we picked up is, in fact, VFV, and that's Vanguard S&P 500 ETF. Gives us exposure to the 500 largest companies in the US, but it's available to us in Canadian dollars. So we're going to hover over to our entire portfolio. You do see the total value currently sitting close to that 277K. Majority of it is in our non-registered personal account, but we do have then a TFSA tax-free savings account, our RRSP registered retirement savings plan. Given that we've managed to sell many of our existing holdings that either were underperforming or were smaller positions, we've streamlined this portfolio. Currently, we only have 10 total holdings, other than a few crypto. This includes mainly a few ETFs. The largest of them, in fact, if we look at it, is our shares of VDY. If I click onto it, this is the Vanguard 50 Canadian High Dividend Yield Index ETF. That's our largest holding. We have some shares in our non-registered account, some in our tax-free savings account, as well as some in RSP account. All in all, you do see the performance for them. What's really unique about VDY is the fact that it does pay a nice dividend. It's paid on a monthly basis and currently has an annual yield of around 4.6%. With that, our second big holding in this portfolio is indeed VFV, or Vanguard S&P 500 Index ETF. It is available in all of our sets of accounts, RSP, TFSA, and non-registered accounts. And across all of them, we are showing a positive return. VFE does pay a dividend, but it's quite more modest compared to the other ones. It has only a yield of 1.35%. It's mainly focused on growth as opposed to paying a dividend. Their distributions, though, are currently paid on a quarterly basis. As I pointed out, our third large holding is indeed shares of Tesla. We've been picking up more shares of that. It's available as part of our USD account. You do notice here we have about 5 shares in our non-registered account, but we do have 27 in our TFSA and another 26 in our RSP, bringing it into upwards of 50 shares. It does not pay a dividend yield. Tesla is really mainly focused on growth, and that's why we are adding gradually to our shares of that. If I go back and focus on the rest of this holdings, let us walk you through the remaining of those total of 10 holdings. We have shares of XEF. It is currently up by about 8%. We only hold shares of XEF or BlackRock Canada iShares Core MSCI East and Far East ETF in our non-registered account. Following that, we have shares of V or Vanguard FTSE Emerging Markets All Cap Index ETF. As the name suggests, it gives us exposure to the emerging markets. We only have those shares in this non-registered account. Currently, shares of V are up by 2.6%. And lastly, we have some shares of XIC. I believe this is the last set of our Canadian ETFs. We have some of them in our personal account. And in fact, all of them are in our personal account. We used to have some of them in our RSP, but we tried to consolidate them and sold the remaining ones in our RSP account. The XIC does have a dividend yield paid quarterly. The annual yield for that is at 3.19%. If we move on and take a look at our holdings in the TFSA account, just want to quickly walk you through that. Mainly in the Canadian side, we have VDY and VFE. So we've certainly streamlined what we hold and got rid of the other ones. In terms of the US portion of the holdings, we have shares of Nio that I talked about, Tesla, which we talked about. And lastly, we have still some shares of Google. They're up by 2.26%. And lastly, the third and final account to look at is the RSP. On the Canadian side, we are showing the same two ETFs we talked about earlier. But on the USD front, we have shares of Amazon and Apple. For shares of Apple, they're currently up by about 8%. Shares of Amazon, however, they're down by about 1.7%. Not that bad. That's why we are picking up those shares earlier today to take advantage of the lower prices and bring the cost average down. We still have some funds left in this account that potentially we could kind of deploy and buy some additional shares. The game plan for the rest of the week is to have the option of taking advantage of limit buys to pick up more shares of Tesla, possibly shares of Amazon if the price continues to drop. And on the Canadian front, if we deposit some funds to our account or if we receive some dividends, we want to use those funds to pick up more shares of mainly VFE and a little bit less focused, but if there's any leftover, possibly shares of VDY. The reason we are focusing more on VFE versus VDY is that we want to get more exposure to the US companies. We currently, in our entire portfolio, we have about 50, I believe around 51% or so exposure to Canadian businesses. And we want to kind of limit that and get a little more diversified approach, given that the Canadian economy is not, doesn't account for about 50% of the world economy. That's why we want to limit that exposure to a more modest percentage. Thank you so much, everyone, for watching this video until the end. I hope you found it beneficial and gained something of value from it. If you did, don't forget to smash the like button and subscribe to our channel. Here on Momentum Finance, we post every week videos about finances, investing, and financial freedom. Thank you, and I hope to see you all next time.